All right. Good morning. Good morning, everybody. Short week. It's Market Friday since we don't work tomorrow. That's going to throw things off a little bit since we're going to get non-farm payrolls tomorrow while the market is closed and isn't going to be able to react to that. So certainly something you want to think about if you're holding on to things. Look inside your portfolio and ask yourself, are you willing to sustain the market opening down 5% next week or up 5%? Doesn't have to be bad. It could be good too. It could go up. So we got Fed speakers today. Bullard at 10. Otherwise, we should go into the end of the week pretty quiet. We should have everything off the books by lunchtime, and that will free everything up for the 0 days. So if you kind of read these market wraps every day, you'll notice that the market is down today, mostly based on sentiment, right? They've lost that warm, fuzzy feeling, and now we're down a little bit, but really nothing's changed other than their outlook. And I point that out because we still have risk of an upside move, even though risk to reward doesn't favor a move higher at this point. There's still that upside risk. Here's the spot gamma levels for the day. All right, so we can see again in Asia, those buyers stepping up and defending that low, but they just can't seem to get anywhere. So this is the Chinese market. Here's Japan. They didn't quite get the same recovery. And right now, this is Europe inside day number 2, which puts us in an IX10 pattern. Nice expansion so far. It's a really, really nice looking candle. Way better follow through than yesterday, but it's still inside day at this point. So we're looking to see if Europe's going to top out across that high, or if it's actually going to get a breakout, which will put it up against March 13th candle, the high of that day. I really don't expect much more than that today. That'd be about the end of it. So the dollar did snap back yesterday, but no real follow through yet. We're still inside candle. So we do have additional auctions at 11 and 11:30. That rig count at 1 o'clock is really nothing to be concerned about. I'm not going to say that there couldn't be some sort of news, if they have some issue with the fleet, say, they bring out a whole new set of rigs and have to do a recall and put all the rigs down. It's possible, but so's winning the lottery, right? It's possible, not probable. So more than likely the 1 o'clock rig count isn't going to amount to anything. I worked on those rigs for most of my life, and they don't swap rigs out with a new fleet very often. So it shouldn't be a big deal. All right, as you can see, the volume is light today. This is partly due to the idea that, it's the last day before the holiday, short week, but more importantly, there's a lot of economic data sitting on the table, and everybody wants to wait until that gets taken off the table before participating, right? So when we try to ask that question in the morning, how impactful is the econ going to be today? There's so many different ones, right? CPI, PPI, ISM. If you're new to all of this and you're trying to figure out, which one of those may be impactful today, this is a really good gauge, because if it's less than, say, 100,000 in the volume, the market is looking at whatever econ we have on deck as a threat, and it's sitting out waiting until that threat has passed. If it's above 100, it shows that they're not too concerned about it. They're engaged in the market, trading into it, and they're likely to trade right through it. Of course, if it gets above 200, you should be worried. With a little asterisk, if it's triple witching or something, you're going to see some extra volume in there. All right, so we managed the MDP yesterday, starting the count over again, but we didn't get very far since we've already gone through the daily pivot this morning. All things considered, we've got a very narrow range from the overnight, and a relatively muted day. So maybe we want to approach this first with our own Globex. Then yesterday's RTH. And then all of yesterday. And you can see those three zones there that we have to deal with. While also focusing on the ADRs of the day. So we do have a market maker move to add those ADRs, but I mean, that's a really small market maker move. Maybe it'll grow a little bit. So far, no, that's not really impressive, but it is there. So, it has to be recognized. So we're working our way back down to the weekly pivot point. It's one that we've talked about a number of times. When we're above the weekly pivot, here's last week's way down here. When we're above that, we seek bullish opportunities. And when we're below that, we seek out bearish opportunities. And of course, at some point, even though you're above a weekly pivot point, you're going to start driving back towards it. So, that simple phrase of saying, we look for bullish opportunities when we're above the weekly Sure, as long as we still are continuing to move farther away from the weekly. But we're not yet bared up because one, we're not underneath that pivot point. The trading today can go really one of two ways. That we're going to go into the end of the week just holding this level, chopping around inside of the box that I've got drawn there. It's 100% possible that that's how we finish the week. And then there's the other possibility, which is the market takes a real serious leg up or a real serious leg down. And that's going to come from whatever data we get this morning. So we can see that the market's anticipating a slight economic shift this morning, nothing really big. But if they get caught off sides or get caught surprised, then it could get a lot bigger fast. So right here is the daily chart. We've got yesterday's candle. It's not really too big of a deal. If we break through the top of yesterday, 4150 is going to be the target. We'll move towards that like gravity. Of course, we'll have to get through 4142, but I don't see that as too much of an issue. 4150 will be the top side target if we break out of yesterday's level. It might seem like a long ways off, but I'm not reaching here. Right? Talking about less than 1%. That's nothing. We're flat on the day right now. We've got nothing. So we could easily move 1% today. And if things get negative and we break out of the downside, which would be breaking out below 4,100, the low of March 31st will be the first target, 4078. And we could easily overshoot to 4050, but I think getting past 4078 would be a hard bargain to get through. So we've got some clearly defined levels to deal with. If we do break outside of yesterday's range, right? I really think we're going to need the, we would need something from the economic list of data points today to make us drive that level. Ten-day, 30-minute volume profile. You know, we started to ease into this shallow area where we'd consider an air pocket, and yet it stabilized and it didn't continue to move through it. A little bit of a shock. We didn't hit, you know, like a large order pool or land into any real large liquidity. So not sure what we hit, but as you can see, we just stopped right in the deepest portion of that air pocket, and it held ground there. The market does odd things sometimes. I don't have an answer. When we're at the bottom of this box, we expect to go to the top. When we're at the top, we expect to go to the bottom. By the time we come back on Monday, we will have lost Thursday and Friday's price action here on the far left side. So the new bottom of the box will be 39.80, unless we happen to get down there today, which honestly is not the base case argument. 5-day, 5-minute volume profile, call it the 5x5. No new VPOC today. And the one that we can see is 40.43. It's kind of out of reach. And we can get there, but we've got so many other levels to focus on before that. By the time we did get there, we would already be dealing with everything else, namely 40.50. All right, so we're still holding above that 10-week, even with all of the negativity that we've had, where we've topped out and just kind of been slowly fading back off of that high. We really haven't turned around and ran back towards that 10 yet. So for the 10-week, we're still sitting 2% above that thing. And here the 10-day moving average, about 8.8%, so a little more than 0.75%. We're on the down drift. Like I mentioned the other day, once we kind of peak out, we tend to drift back down. We don't have to get to the 10, but more often than not, we get back down there and reset. So we had the same thing here, from the swing low to the swing high, back to the swing low. We don't have next week's bars because this indicator doesn't understand that today is the last day. But this was the range for the week. That's the entire weekly expected move. And it doesn't realize that today was a holiday, or that tomorrow's a part of the holiday weekend. So it's got the lines drawn for tomorrow, which means it very likely calculated for volatility for 5 days instead of for 4 days. But it's kind of what we get when we use an indicator instead of doing everything by hand. Still, we're really close to where we were on Friday when we ended the week last week. We haven't really gone anywhere. And so, we're really not expecting much today unless the econ comes out that really rocks the market. We're just really expecting to hold the line, go into the weekend, and come out fresh next week. This says that we have an expected move for today of $23. And we could add this $4.50 to that, and that gives us around a $27 expected move. That's not very accurate, right? In the current market, that thing has been very misleading. They've been undercutting or under projecting the day-to-day volatility. Just to put it into perspective, that's a 30-point box. And the expected move that we just looked at, added to the market maker move, says that the market should move about as far as this box today. That's the RTH of yesterday, basically. So something to consider. All right, Bitcoin's down. We have a continuation of the semis are still down. And Nat gas still kind of wobbling around down there at those lows. Up today, but really just chopping around. And KWeb is up. All right, so we got Alibaba gapped pretty good. Still holding underneath 100. I would certainly use that as a gravity point. If we happen to break back above this Globex high, 100 would be the first. If we can get through that, then we'd focus on 101.59. Got a little bit out of PDD. The volume's still really light in here. So, this doesn't reflect very well. All right, now JD's worth watching. This is a pretty good setup here. So what I would be looking for is first, maybe a break below that low, right? That low of yesterday. We're looking for a recovery bar or like a stabilization. So we want to see it break this low. Open down, maybe even travel down a little more, and then flip that thing over and run it back up where we end up with a doji, which primes us for Monday. I'm not seeing one for an example that I could use here. Maybe a day that kind of looks like this day here. We want a really long pin bar on the bottom, rally back up. It can close green. It doesn't have to close red, but we want to see that long bar and then that nice recovery back up, closing in the upper portion of the whole thing, right? So, if that's the whole day, we want certainly to close above the 50%, and it would be better to close, in the upper 25% for a recovery day, so that on Monday, what we're looking for on Monday is a real big expansion bar from this setup. And we would get into, say, that machine gun pivot reversal that I think his name is Rob talks about at the Strat. that one day that we're looking for, which very likely is going to be Monday. I hope it's Monday. I hope it's not today. Will be an expansion bar that could very easily get all the way back up to the top of the range in a single day. It'd be a really big day. This is a TRB setup. We just need the recovery candle first. All right, so big picture, looking at Microsoft and some of these others. Say these FANG names. We're still not bearish. If you look at it on the weekly, this is just one minor down week, down, not even really down. I mean, we're inside week. But so far, we're holding above the 50% mark, holding above it really nice, by the way. So, you know, approach with caution the idea that we ought to be all bared up. Temporary mild weakness. But looking at them on the weekly, still bullish. We were looking at Microsoft, now we're looking at Apple. It's the same thing. It's still bullish. So, you know, these last 2 days that have been a little soft, we were almost due for a little bit of a pullback after that really nice run that we had, right, from the last pullback. So just kind of, you know, tiptoe a little bit. If you're short, think about getting some covered before the weekend. All right, so we got a question on CVS. And the question is, can it reach 81.50 by April 21st? So a good way to approach this question, start with April 21st. That's 15 days away. And this says that a 1 standard deviation, not even a 1 standard deviation, let's approach it a little different. This is an average expected move. And what it's averaging is all of the out of the money options on the call side and all of the out of the money options on the put side. So it adds them all up and then divides by however many strikes there are. And that gets you your average. We're at 77. This says we can go $3 more between now and then. That would put us at 80 and 75 cents. So not 81.5. Now that doesn't mean that it can't go there, right? This is only one tool, but it's a starting point. Then we have the market maker move, which is adding another 50 cents. The thing about this market maker move, it's not supposed to last more than today or for a week, and today's the end of the week. So that's the whole week right there. Next week, when we come in on Monday, you're going to want to look in this same spot. And this is one thing I don't like about Thinkorswim. If there's no market maker move, it just won't be there. I don't like that. If there's no market maker move, you should still see the MMM and just put some zeros behind it. Let us know, you know, that the darn thing still exists. There just isn't one today. I've had people ask me, hey, where'd that market maker move go? I broke it. Where'd it go? Like you did something wrong and made it disappear. You didn't do anything. There just isn't a market maker move now, and it's gone, and you can't see it until the next time it shows up. But on Monday of next week, see if that shows up, see if there's a market maker move, and see if this number changes, because it can certainly, it can get bigger, it can get smaller, even though time is going by. If volatility continues to pick up, then this number can expand greater than the theta decay that this market is getting inside of these options. So that's one tool. You can also go to the chart, click on the beaker, and type in the word cone. You get this probability of expiring. These data points tie in with the expirations. So go to the gear icon, and we're looking for, on the time axis, show expiration Friday. Now we've got red lines that match those dates, those cost points. So 74.63 and 81.50 is the time frame that you're asking about. April 21. My bad, I was looking at May. For April, it's 80 and 75. So this is still, just like with the other one, saying that you're going to come up a little short. And again, these are just projections. There's no, guarantee that it can't go to 81.50. But so far, you're betting against the odds. Another thing that you can do to get a probability of how far we can go is to come over to the options chain itself, or to the risk profile. So from the risk profile, the date at the top will give you probabilities. You want to look at the 21st. There's a 1 standard deviation move between now and the 21st, and it also hits $80 right on the dot, and 76. I'll just give a penny to the downside. It's a 70% chance that price is going to close inside of this gray area. And there's less than a 40% chance that we're going to close outside of that area. About 15% to the upside and 15 to the downside. So I guess it's running 70% inside the box and then 30 outside the box. So a 70% chance that your trade is going to lose. If you have to get it to 81.50, you've got about a 30% chance of that happening. All right, looking at Tesla, this is weaker than the other fangs that we looked at, Microsoft and Apple, but it's still not bearish. And that's got to be taken seriously, right? Like, you don't want to, this one has already stalled out and has really failed to continue the move, but it hasn't broke down yet. The candle of control is still in control. It hasn't given up. So while it looks weak, it certainly doesn't look like a great short. It would have to get below that 165. Now you could run it down to that 165, since we have an inside week breakout starting in Tesla, and it just started, right? But see how it already pulled back up? It lifted back up inside there and closed inside. So today on the daily, we would want to see that it continues to break down below this really big recovery candle from 327. And for this short, you're still only looking at getting back down to the high 60s, 165, 166. And I wouldn't look for a breakdown beyond that, since, you know, it's still not bearish. Not the same with Amazon. It doesn't really fit in there with the others. All right, and NVIDIA, seriously, that was a really good gap down yesterday, but look at the recovery yesterday too. So it got below 165 and came right back up again and closed higher than it opened. Looking at it on a weekly, hopefully you can see this is still very bullish. So approach with caution, right? If you're thinking about shorting these for a swing, it hasn't given you a short signal yet. You could approach NVIDIA with the idea that there's some old liquidity up there, right? Just mapped out this zone. How we leave this zone will be really important. So if we get a really big leg down, which would be like this red candle here, that was a big leg down candle. Then we're looking at, you know, rally, base, drop. Now we're back up to that same spot. So we're looking for rally, base, rally, or rally, base, drop. If we drop out of there in a grind, say little candles like this where it's just grinding out of an area, then I'd still be bullish. We drop out of there with a big leg candle, that'll be a completely different discussion, right? Then we can discuss getting bearish. But we need to leave this zone first. And now that we're in it, we could hold that zone for a while. We're only in week 2. So we need to see how this week ends. And since there's 3 places to put that proximal line, I used here the most common place. But if we were going to tighten it up, then we've just barely got into that level in the last 2 days. And measured move on that head and shoulders. Pretty sure we're done. Yeah, more than done. So the head and shoulders is over. We wouldn't even use that for any kind of consideration on should we still be bullish or bearish, because it's already well exceeded the measured move of how far it should go. All right, so AMD took a pretty good punch, but just like with NVIDIA, it did pull back on the day. There's a line in the sand at about 50% of that bar. And, you know, if we were going to look for a short-term bullish play, even just a rebound from how far AMD fell over the last 2 days, we would want to see that candle rebound at least 50% yesterday, and it didn't, right? It closed below the 50% mark. It would have been better if we closed in the lower 25%, but that's all right. The idea, though, is that we want to approach this with a little bit of caution, because if we come out to the weekly, 88.63 is still on the table. And that's all the way down here. So AMD is inside week breakout, IX10. And if it continues to break this Globex low, say 91, then I would target 88.5. That thing really took off. I mean, it had already been weak these last few days, but yesterday, that was impressive. And it passed a point of no return where it should have stabilized and been done for the day. And after stabilizing and stopping for a little bit, it continued on anyways. So it did stop at 11, just like, most of our trends that happen in the morning stop at 11, and then they'll either resume in the afternoon or flip over or do what this did and just kind of chop and grind and hold the lows. But it sets it for today to continue the move. So this thing could very easily just make another leg down. Just keep in mind, it doesn't owe us another leg down. So if you're going to try to short this thing, let it break that Globex low, or at the very least, let it break back outside of yesterday's low. Yesterday's low has more conviction to it than this after hours low or pre-market low. Well, it didn't hurt to look. So I turned on the profile because I wanted to see how much volume was down here. Not as much as I had anticipated. A lot of times you'll hit a liquidity pool and it'll show up in the volume profile. We hit some, but certainly not enough to get my attention. Never mind. So it was the chip names. They all took a pretty good punch yesterday. Number of these started to recover. So they're going to be a little bit of a tell today. They tie right in with the NY Fang that we normally watch. So keep your eye on that. Notice financials yesterday were just holding steady. I mean, I know it doesn't look very steady with these extreme pushes to the upside, but it held the lows. It stayed near VWAP. It really didn't expand anywhere after the market opened. And it went into the close only slightly higher than where it had opened. So down on the day, certainly from the day before, but really a recovery or a stable day after such an extreme move. Tuesday in the financials looks like Wednesday in NY Fang. I mean, nearly textbook. Even the leg down at 2 o'clock. Watch the clock, right? So today, let's see if these two sync up. If we get financials and technology moving in the same direction at the same time, then we can really see the market move. If we stay divided like this, tech versus finance, then we're going to continue to see these choppy sideways days where the S&P continues to struggle, and we just can't seem to get a leg out. All right, so we still got the 10-year continuing to press to the downside, and we are below that 3.3 level. So this is going to become more important, I'd say, by Monday. We'll let the market chew on that over the weekend with whatever we get from ADP on Friday and whatever we get this morning. And I think Monday when we come in, we're going to be looking at an entirely different market if we open Monday still below that 3.3 level. I'm surprised the market's not responding to it already, but weekly close holds more weight to a lot of firms who are looking at monthly and weekly charts, and they're not looking at a day-to-day chart. So I'll just bring it back up again, add caution. This is a big deal, this 10-year. And I think by Monday, a lot of the rest of the market is going to have time to come to terms with that too. We continue to see this morning bonds pushing to the upside, and every time it does, we're getting this drop down in the yields, and we're getting this pressure on the S&P. So watch the bonds today. They're going to be your tell. If they hit resistance, say yesterday's high like we did yesterday, right? We topped out, we started falling in the bonds, and that's when the S&P got a little help off of those lows. If we hit our head again today in the bonds and take a big rejection, imagine this candle upside down. If we get a market that looks like that, we'll see the S&P pop today to the upside. But if this comes up to that 111 and breaks out, and we get another one of these really big expansion days in the bonds, I would say we see the ES 39.5. That I don't think that's reaching too far. Maybe 4,000 flat, right? For one more leg up, getting down to 40, 50. So keep your eye on the bonds, even going out and measuring them on a higher time frame, right? Looking at them, say, you could use TLT if you don't have, a broker that lets you look at bonds. Use the daily and the weekly. Look for resistance. What is this going to hit? When's it going to hit it? Is there any major moving averages out there? So that when this does hit something and begins to pull back, if it pulls back and doesn't just reject off of that high, you'll be ready for it. And it should time up with the S&P around lunch, right? So we'd be looking for this to take a rejection and start to fall, say at 11, maybe 11:30. And as it begins to do that, we get the rally up in the S&P. Well, it didn't happen right away either yesterday. Let's see CB. So right in here where it really finally gave up the ghost and it started to fade off. That fade off is when we finally started to get that rally. And then of course bonds go into the close an hour early. So that kind of gave the market the freedom to move around without bonds, without the bonds interference. Right, so now you got something to keep your eye on today. It's just not NY Fang and KRE. Keep your eye on the bonds, see how that's hitting the yields. Watch for the news. Really start looking for these articles and any discussions on Bloomberg talking about yields below 3.3. See if that story starts to pick up. I don't think it's going to be enough today. I really don't see it happen until Monday, and that'll be because we close on the week below 3.3. Yep. Wasn't too bad. So that's it, everybody. I hope you have a good long weekend. Be careful, be safe. I'll see y'all next week.